I don't know. Having technical difficulties as usual. All right. All right. Welcome to the show, everybody. Had some technical difficulties, but it's okay. We're going to go right on into this, okay? We're going to dive right on in. First thing I'm going to do, however, is share this on Twitter so that people can see it. Because I had to restart the stream for some reason. So, just give me a sec to tweet this out. As usual, had to restart the stream. Come join me now. All right. Tweeted it out. Okay. Uh-oh. All right. I'm almost there. Send now. I need to delete the previous tweet. I don't know what happened there, but oh well. All right, so hello, guys. It's been a long time since I've gone live. I do enjoy it. It is quite fun. If this is your first time joining the Crypto Investigators, I guess I will have to. No, yeah, link is in the description box below. We have a Discord, community Discord that you can join, and people shill us coins. You know, anybody, it's free to join. Anybody can come in, they can shill their coins in the cryptos to look at channel, and then those coins will be put up for a vote once a week, and then whichever the top 3 or 4 of that week, we make video overviews on. So join the Discord. There's also, a bunch of other stuff in there. We have, just talks about anything. We have an NFT channel, a metaverse channel, a, mining channel, a staking channel. We have, food and animals and sports and all that stuff, and then we also have a data research and, just like a research dump, just where people can just come in and just dump research, and then, we like to use that in our videos, so that really helps out. But it's, a community-driven channel and project, and me and the guys, Mr. Use Case and Crypto-Not73, we really enjoy helping people the best of our ability, to the best of our abilities, and we just like crypto, basically. We just really like crypto, and that's about the gist of it. But enough of that. Like and subscribe, all that stuff. Smash those likes, help with the YouTube algorithm. You've heard it a million times. It does help though. So if you could, please hit that like button. And we're gonna go ahead and dive into this content. So first thing we're looking at right now, we're looking at coin market cap. We're looking at the rankings of the cryptos. These are ranked by market cap. So coming in at number 1, of course, is Bitcoin. Bitcoin is at $39,800. It's up 1.61%, and on the 24-hour, and in the last 7 days, it is down 1.39%. It has a market cap of $756 billion, with 19 million Bitcoin essentially in circulation. So Bitcoin's down for the week overall. I'll get into some Bitcoin TA in this video. But first, I am going to start with the DXY, but I'm getting ahead of myself. Next, we have Ethereum, of course, at number 2, sitting at $2,900. It's up 1.83%. It's basically the exact same as Bitcoin and down 1.43% on the 7-day, up 1.83% on the 24-hour. The market cap is $353 billion with 120.5 million ETH in circulation. Tether, number 3. Binance at number 4. USDC, number 5. I still don't know why we put these stable coins in here, but I don't know. But yeah, we got Solana, which just this week, I guess, passed XRP. XRP was sitting at number 6, but now Solana sitting at number 6. Solana is below $100. It is at $98.18, and is down 3.23% on the 7-day, with circulating supply at 333 million Solana. XRP at 64.5 cents. It's down 11.35% on the week, with a circulating supply of 48.1 billion XRP, with a market cap of almost 31 billion. And then rounding out the top 10, we have Terra Luna at number 8. We have Cardano at number 9, and Terra's stablecoin, UST, at number 10. And I'll just go ahead and throw it in there. Number 11 is Dogecoin. What's up, Mr. Use Case? When Moon? That's a good question. I guess we'll have to, maybe I will have some type of answer for everybody later in this video. So let's just go ahead. Let's, round out the top 10 or 11, whatever. Dogecoin. Yeah, you can see it now down here. Avalanche, blah, blah, blah. Yeah. So we've gone through all that stuff. That's all nice and fun. Not Twitter. Whoops. All right, so let's take a look over here at the DXY. Now, in my tweet talking about this, and in the description, talk about how I want to go over symmetrical triangles. And the reason is because, at least on the 15-minute chart, the 30-minute chart, maybe even the 1-minute chart, we do have a symmetrical triangle on the DXY. So what a symmetrical triangle is when you have a downward sloping line of resistance. Resistance is what the price action bumps its head, figurative head, up against. So like this, you got this wick up here, this wick up here. So, and that creates this downward slope. Then you have an upward sloping support, because the candles sit on top as support. And inside, you have a bunch of trading action going on in here, okay? So in a symmetrical triangle, you have two lines that are going to cross eventually. So, and that's what makes it a symmetrical triangle, is one is going up, the other is going down. Now, if one was flat, had a flat level of support, and this downward sloping resistance, that is called a... Oh my god, I just put myself on the spot like that. Why am I blanking right now? That's a descending triangle. Thank you to myself. That's a descending triangle. And then you have one where you have a flat level of resistance with an upward level of support. And this is an ascending triangle. So you got descending, ascending, and symmetrical triangles. Now, a lot of people want to know what does this mean? What is this? What's going on? What can I expect? What are we looking for in this? So, within a symmetrical triangle, we have price action getting kind of constrained. So it's kind of getting a little coiled up, and we're just getting closer and closer together between the highs and the lows. So you have lower highs, and then you have higher lows, and they're coming in here, and even inside the triangle, we have another triangle that's formed, which actually broke out of. So we did have a breakout of this triangle. That's something that you could have made a possible trade on. And the technical target for that triangle would be, so you take the widest part of the triangle, the widest, and you go down to the bottom of the triangle, and you move that over to a little bit past the breakout, and then you have your technical target. And that says 103.84. All right, cool. But we're looking, or at least I'm looking for bigger time frame, and I'm looking at this bigger triangle here. So if I want to set up a possible target, we would go from the very top to the bottom. I'm going to expand this out so I can have an actual bottom here, and then bam. And then our targets would be a little bit past a breakout zone. So there's no telling where that breakout zone would be. But you could, let me get rid of that. What am I doing? All right. But we can just kind of guess. Now, my guess would be on the upper end, that's a little more difficult. But on the lower end, if I go ahead and I take this and I clone it, that way I don't have to come over here and measure a new one out. And I come down here and I do a breakout zone on the same as here, or I can even find something that lines up over here. So what I'm seeing right now is that if this was to break down, it actually makes a lot of sense, because if I can find it, horizontal ray, throw a horizontal ray up here, and I throw a bottom on there, and look at how many times we have a reaction to this level. So we have a reaction here where price came up, bounced off, and then finally it broke through, but then it was too heavy, so it broke down again, and then it fought it a lot right here, and then it finally shot up, broke out. Then of course you have a pullback for a back test, and then broke out even higher. Love a nice bull flag. Yes, yes, yes. That's another name for this, is a bull flag. Actually, this is a bull pennant. If it's a symmetrical triangle, it's a bull pennant. A bull flag is a channel. So this would be a bull flag. And then you would have price doing this inside of it. And then you get your triple bottom, and then you bounce out typically, and then you come back down for the pullback, test that line, and then you keep on going. Break on out. Break on through to the other side. All right, so now that I have this lined up, and it's right on the tip of this right here, I think I could be pretty confident that this would be a nice area for a breakout zone. And I'm going to put that in the same spot, but on the upper end, and then I'll just draw a line out here. And I'm looking at probably 104 as my target on the upper end. Breakout, when a lot of people don't know when that a lot of people don't know when to enter a trade. So because there are what are called fake outs that happen often. So what happens is you'll have price come up. Let me make this a different color. Let's go with yellow. So price will come up and then price will come down. Almost always. You almost always have to have that back test, that pullback. If it just goes shooting up and never comes back, it's kind of dangerous. So we like to see that pullback. Now what can happen is we can fall through, that could be a fake out, and we can fall through and back into this triangle. That happens all the time, and then we fall down, and then we hit that bottom target. Most likely. Then, so when entry is the question. When entry. So entry is, all right, we've come back. Dang it. We've come back. I don't know why that changed from yellow. Yellow. All right. So we've come back. Now I can change it. We've back tested, and then we've started to work our way back up. Now at this time, I would say the least risky is once you cross this line here, or it would probably end up being in line with this high up in here. So, but once you break through that, or at least come up here, you can enter the trade. And then after you've entered the trade, always set a stop loss. So a stop loss will save you money just in case price decides to give you a fake out and then pull back down. So a stop loss should always come in just below your entry point. And what a stop loss is basically a limit order. And a limit order is an order that you set that is triggered at a specific price. So once you've entered this trade and you're going long, and if you're going long means you expect the price to increase. So you're going long, and so you put in that stop loss, maybe 1 or 2%. It all depends on how much you are willing to risk. But then you set that target, and then if it hits that target, what I usually do, I set an alert on my phone when it's getting close, or at least, I set an alert on the chart a little before my target. I get an alert that says, hey, you're almost at your target, or price is almost at your target. So I watch, wait, I go ahead and enter my target. I will cancel my stop loss. I will enter my target, and then see if it hits. If it doesn't, I'm going to probably do a market sell as it's falling down, or I can just wait because it'll usually come up and hit the target. So there's a lot to trading, obviously, but that is just one way that you can trade a symmetrical triangle. Also important to note, the symmetrical triangle is typically a continuation pattern. So what that means is if you are in an uptrend, like so, if you are in an uptrend, it always goes back to yellow. I'm just trying to delete. Okay, here we go. If we are in an uptrend like this, we're coming up in, we're going up and to the right, and then we enter a pattern, some type of corrective pattern. That means you are in an uptrend, and since this is a continuation pattern, typically, I think it's like 55% of the time. So it's not super, super often. It's not like 100% guaranteed it's going to go up. But statistically speaking, most of the time, this thing will break out towards the upside because it is a continuation of the previous trend. So if this was upside down, we can go ahead and do that. Let's just go ahead and invert. So if we're upside down and the trend is coming down, then we would expect this to coil up and then break down. So if you have any questions, please put it in the chat. And also, or just let me know what you think. Hit that like button if you're enjoying the content. Also, subscribe to the channel. And I love you guys. All right, so that's symmetrical triangles, and that's the DXY. This is on a 15-minute chart. 15 minutes. Anything lower than a 4-hour chart is going to be more difficult to trade because you typically have more volatility in the short term, or at least more or less confidence. What am I trying to say here? You have a lesser odds of, there we go. You have lesser odds of hitting your targets on the shorter time frames, just because they're that's the word I was looking for. It's much more unpredictable than the higher time frame. The higher time frames, the macro view, the macro perspective is so much easier to gauge than these smaller time frames, because anything can happen on the smaller time frames, at the blink of an eye, because they're happening so quickly. So always keep that in mind. All right, so let's just go ahead. Let's go ahead and back out. I'm gonna get rid of these drawings. Let's go to the daily. Let's back out a little bit and take a look at the DXY. And I might actually, let's put it on a 3-day so we can get some more data in here. All right, so we have, look at this. This is crazy. I'm just going to go ahead and draw this line of where we've hit. I'm going to make this solid and a little thick, so you can see it. Make it white. There we go. So I say so a lot, and I'm sorry for that, guys. I edited it out of the pre-recorded videos for our overviews. I say so a lot. So so if anyone can please give me a different word. This is just recent. I don't know why. It's just something, because I try to get away from the ums and the uhs, but I still do those also. Just like that. And it's really annoying because, they say you're not supposed to do the uhs and the ums and the so's. You're supposed to be able to, talk like a normal person, but sometimes it just can't happen. But anyway, that's another word you can use. Anyway, we have these tops here. I don't know why that's acting so crazy. So we're hitting this. Now everybody that watches this is just gonna hear me say it over and over again. Anyway, we have these reactions multiple times over this one was in 99. So what is that? That's 23 years. Over a 23-year period, this has been a particular point of action of trade of resistance, mostly resistance. We did have a breakout of it here. We got 3 peaks, and then we broke down, and now it's coming back up. And what I want to see is the Fibonacci. What does the Fibonacci say? Fibonacci says we are right in between the 618 and the 702. That's what the Fibonacci says. And if we go, no, not going to do that because this is the top. So we are right in that sweet zone. I'm not surprised that we've been rejected from it twice already. One of the rules of, and this one actually technically didn't even make it to it, but one of the rules of trading is if price hits a certain point numerous times, like this, 1, 2, 3, the more times you hit something, the more likely it is, the more times price touches a certain level, the more likely that level is to break down, to fall apart. Because what's happening is you have buyers coming in, they're buying, well, let's just say the dollar. It's weird to say you're buying a dollar, but they're buying the dollar. And actually, look, check this out. Let me get rid of this. This is so much fun. I hope you guys enjoy this because I really enjoy this. But this is actually a symmetrical triangle itself. It's not very, it's hard to see, but this is on a 3 daily chart, but technically we had a breakout and we set a higher high. So that is very interesting. And we had higher lows, as we got a low here, as we have a low here, and then a higher low here, and we pushed up, and now we've broken out of this kind of a symmetrical triangle. I mean, if you drag that out far enough, those lines will cross. So that is a very ugly, it's actually like a flat correction is what it looks like. It looks like a flat correction. Now, if you don't know what I'm talking about, I can come over here and I'm just going to go ahead and Google it. Flat correction types, I guess. And then I'm going to go to images, and I'm going to show you guys what these look like. So here we go. I don't know if you can see that one. Doesn't look like it. Ah, here we go. Ah, it's so blurry. Like, even on my screen it's blurry. Let's go to the actual page. Let's see what it says on here. Ah, here we go. So, I don't know if you can read this or not, but so these are flat corrections. They're called flats. So you got a regular flat, which is just a how do I put it? So in a regular flat, let me just go to a little bit of blank area here. Regular flat, you have a flat level of resistance and a you have a flat level of resistance and a flat level of support. And then you have price action come up, and it kind of bounces around in here and then breaks out. So this is a regular flat correction. Then we have, that's Twitter. Then we have an expanded flat. So with an expanded flat, the price action comes up. We hit an upper level here, a lower level here, but then we expand outside and then we continue on. And flats are typically continuation patterns. So, and this is an ABC, and these are just ABC corrections within these corrective waves here. I'm trying to see. Okay, and then you have what is called a running flat, which is like so. We come up, come down, come up higher, create a higher high, create a lower low, and then keep on going. Now, why is this important? Why am I showing you this right now? Well, because if we go over to the Bitcoin chart and we take a look here, let me go ahead. I've got a lot of stuff drawn on here, but it can be drawn later. I don't care. Am I still on the 3 daily chart? Now, what do we have here? We have this line here, this line here, and we have price action coming up, coming down, going just above that line, coming down, and now we're stuck in this corrective pattern, this channel here. So if we go back and we look at the flat corrections, this does kind of resemble a running flat. So we could possibly see price break out of here and maybe actually go up and hit that 100K. I'm not sure about the 100K part, but you never know. And this is on a big macro time scale, and if we just draw a Fibonacci on here, let me expand this out, then you could have that running flat, and we're currently bumping up. Let me get rid of this so we can see. So we're currently bumping up against that 2.618 that we're being held down by. If we zoom in, let's go ahead and zoom in. Let's close this out so we can get some more space on here, and let's zoom in. So we're bumping up against that 2.618 within a corrective pattern. The problem is this is also a flat. And what did I say about flats? I said they are typically continuation patterns. So I say it's a problem, but at the same time, who knows? This thing could just come down here again, retest these lower 30s, because this would be a continuation of this and an ABC. So that makes a lot of sense to me. We could also just see it bounce around in here and then break out. That's a possibility as well. So obviously, number could go up, could go down. I mean, it's what everybody says, right? I think the most likely outcome, in my personal opinion, just based off of on-chain data for the most part and just like fundamental analysis, I think Bitcoin might actually come up here and break through the Fibonacci like it has done in every other bull run. I don't know why it wouldn't this time, but people will say it's not going to happen. And that's fine. Everybody has their own views. I just looking at on-chain analysis plus technical analysis, it's just difficult for me to see that we don't finish this Fibonacci at the very least. Like, it just, at this point, it makes too much sense, which means it'll probably just crash since it makes too much sense. But I don't know. It could also, blockchain backer could also be correct, and this is just, going to be a long, grueling retracement into the retracement levels here. Oh, look at that. Nailed it. Nailed the 0.618. Could just be a long, grueling retracement period before we ultimately capitulate down. And of course, this would also be a pretty extended, but it could also be an ABC correction on the way down. So that would make sense on a bigger, larger macro scale. So yeah. But yeah, if you're liking what you're seeing, please hit that like and subscribe. Also, chat. Hit me up, man. Ask some questions. If you have a coin you want me to look at, and it is on TradingView, it's got to be on TradingView, I will gladly take a gander at that coin. So just hit it up in the chat, and we'll take a look at it. So let's just go ahead and zoom back out and look at the broader Bitcoin chart. And one thing that I do want to take notice of, actually, let me go to a different chart because this is the KuCoin chart, and I really just like the index chart when I'm doing Bitcoin. So I already have drawings on here. Okay, so if we're looking at Elliott wave theory, and we're counting waves in here, and we have a 5-wave structure, we would have 1, 2, 3, 4, and then maybe 5. And I say maybe because who knows if we go higher or not. There's people that say we will go higher. There's people that say we won't. Other technical analysts, I say we will know once we get to retracement off of this move right here. Honestly, that's when we will know. But if we are going strictly off of Elliott wave theory, then there's 2 possibilities. And I think that the second one is most likely. So the first one is, this is it right here. We've had a 1, 2, 3, 4, 5. We're done. That's it. Count your eggs. Whatever. We're going home. Let me go ahead and make this white so you can see that a little better. So we've got your 1, 2, 3, 4, 5 waves. I don't have time to break that part down. Maybe in the future I'll do a stream just on Elliott waves. But so we have 1, 2, 3, 4, 5. We have 4 not exceeding the distance between 1 and 2, or the distance of wave 2. So what we do is we line that up here with wave 3, and then wave 4 right here. We do not exceed that distance. So exceeding that distance would be like if I were to count wave 4 to be over here, then that would not be fundamentally correct for Elliott wave theory. So wave 4 is not longer than wave 1. Now, typically, waves 1 and 5 are roughly the same length. So if I draw a line here and I move it over here, I'm looking at roughly 120,000, 125,000 per Bitcoin. And what I absolutely can see happening in here, because we do have this running flat, this possible running flat, I should say, up in here. Let me just line that up. So we have that possible running flat, which I showed you right here. We have A, B, C, and then a continuation. So B would be higher than this high here, and C is higher than A. And if we go back to the chart, and we give ourselves an ABC Elliott wave correction. Then we have an A. We have a B that's higher than 0 over here. It's going to say 0, but it's higher than wave 3. And then we have C higher than A, right? Totally. That makes a lot of sense. And then we have that final run up to wave 5. Now let's remove that. Let's remove the ABC there. And now, so now what I can see is wave 5 being an A, B, C. That's possible. The only thing about this one is A and C are typically of similar length. So maybe I would dial that back a little bit. So let's move this line here. And let's put our C here and our 5 here. And I'm actually going to get rid of this. And this would actually make a lot of sense too. You could come right up, right off of this, because we do have some Wyckoff accumulation in here. And we would get a spring, hit our head. Probably, this is probably going to end up being right at the 4.236, if not just above it. Look at that. Right there, right above it. And this is all just measuring stuff out and going by Elliott wave theory. But for some reason, some analysts out there are calling this wave 5 to be it. And what kind of frustrates me is that one of them, who I really enjoy, went away from the price chart Fibonacci and instead went to the market cap Fibonacci of Bitcoin. And since the market cap Fibonacci, or since the market cap reached a full extension on the Fibonacci, they're now saying that, okay, it's over for Bitcoin. And I don't know. I think this is extremely likely because I believe every bear market lasts about a year. So if we come down, well, let's just measure this. What was this bear market? This was 365 days. Like, I believe this bear market right here was precisely a year, which is kind of crazy. But so I just don't think, because why would we step away from 4-year cycles when Bitcoin's never done that, right? For people that say that all they care about is historical back analysis and they just looking at history, but they for some reason stop looking at history, it's really disappointing. So 4-year cycles, it makes sense. I know people would say, okay, well, that means that the top back in October or November, that lines up with that 4-year cycle. And this would technically be an extended cycle. And I say, fair enough. But the next halving is happening in 2024, I believe. Now I'm just ranting, and I've lost the plot. It doesn't even matter. This is a possibility. That's all you need to know. I'm live. Sorry for that. But I just need to stick with what I know. And that is, this could very well happen. And I don't see why it wouldn't, or couldn't, I should say. it's definitely a possibility, especially, and I'm looking down here at the RSI. The RSI on the 3-day is not like super extended. It's not even above the 50 line. Now, if we are looking at RSI, we do have some slight bearish divergence. Not really slight, some massive bearish divergence, but that might have already played out because we did drop down on the RSI here. We did drop down here, and now we're in a corrective pattern. That doesn't mean it can't go lower, of course. We have now touched this line on this RSI 3 times. So maybe a third time would be that breakout, that huge breakout, and then we'll come crashing down. But yeah, so that's, yeah. Well, that's going to wrap it up for this one, guys. I hope, if you watch this, that you learned something. Maybe next time we can have some people come join and ask some questions, and we can have some fun. I love interacting with viewers, so don't be shy. Just chat. Just chat. I know you gotta create a YouTube account, but all you gotta do is sign in with Google. Everybody's got a Gmail. All you gotta do is sign in with a Gmail, and then change your name if you don't want your name on there or whatever. You want to be anonymous, but don't be afraid. Just come on here, talk, say something. It's all good. But yeah, that's gonna be it for me. I was very happy to do this. This was a lot of fun. This is basically what I do every day when I come home from work, and I'm just staring at the charts and just looking at it. And it's kind of difficult to put what you're thinking in your head into words, and in an easily digestible way. And I hope that I was able to do that today, tonight, this evening, no matter wherever you're watching this from, whatever time it is, whenever it is. But yeah, I really appreciate every single one of you, and I love you guys. That's gonna be it for me. I am at Lunar Beaches. Please go to the description box down below. Join the community Discord. Chill us your coins. We'll put your coins up for a vote. And at the end of a 48-hour voting period, the top 3 coins are selected, and we, the crypto investigators, at Mr. Use Case, at CryptoNot73, myself at Lunar Beaches, David, we will make video overviews of the coins that won the votes, and then those coins get tossed out, and then we start fresh the next week. If that is something that interests you, please go to the description box down below and join the Discord. It is free of charge. And that's going to be it for this one. I love you guys. See you in the next one. Hit that like and subscribe. Love you. Bye. See ya. Bye. Bye. Go. Get out of here. Go.